today. Today we're going to be talking about managing credit and just wanted to start off by introducing myself. So my name's Aditya and I'm currently a junior finance major and I work here in the Common Sense program. So basically what we do is we help UTD students with their personal finances. So we do things like give presentations like this. We also do one-on-one appointments where you can sit down and ask us any individual questions that you might be facing. And also we like to do some outreach events. So really one of the things that we're trying to do now that campus is closed is to give our presentations in a virtual way just so that it can still reach people who need it. So today specifically, we're going to be talking about credit and managing credit. So do you guys have much experience with credit cards or is this new to you? Like, just want to see from the audience, what do you guys have? All right. If you guys don't want to share, then I guess we'll get started. So, okay, Whitney has 3 credit cards. That's cool. Angelica has one. That's cool. Yeah, thanks for sharing. We'll talk a little bit more. No, that's okay. But thanks for sharing. We'll talk a little bit more about credit cards and managing your credit. So just to get started, okay, there we go. So before we talk about credit cards, we'll talk about a few different ways that you could spend money other than that. So the first one that you might be familiar with is a checking account. And basically what this is that you have money stored in this account and you can deposit or withdraw it, usually just through cash or a debit card. And it's not going to have many fees attached to it. So it's a good way that a lot of people keep track of their money just because it's really an in and out type of function. Another way you could spend money is through secured credit cards. So basically what this is that it's sort of like a debit card with some credit card functions where you store some money on it and then you use it to pay for stuff. And when you pay, it still builds up your credit score. And it also has a credit limit that's based on your credit. So really this is another way to build up your credit score if you're afraid of using a credit card just because you can still get one with bad credit and put a deposit down to save some to spend some money on things and still build credit. So another way to spend your money is through a savings account. And basically what this is where an account where you put some money into it and it'll build up over time, usually through compound interest. But the thing with this is that it's going to have a low interest rate. So if you go on this website here, you can take a look at putting money into a savings account. And if you put it in based on a certain amount per month or changing the interest rate, then you can see how it'll grow through compound interest. If you guys want, we can look at that right now, or if you don't, we can move on. It's up to you. Okay. So now that we'll start talking about credit cards, so there's a few different components that go into them. The first thing is the interest rate or APR, which stands for annual percentage rate. And basically what this is the price that you need to pay to borrow money. So basically like you're going to swipe something on your credit card and that money that's you borrowed doesn't just come for free, right? You still need to pay some interest. So the interest rate determines the amount of money that you'll have to pay for the money that you borrowed. And some credit cards will have different fees attached to them, like maybe you'll have a fee to start up, or there's also late fees if you don't make your payment on time. There may be some annual fees or also fees if you spend over your limit. So you really just want to make sure that you have a good idea of any fees that your credit card might have. The next thing is the monthly payment. So usually you'll have a minimum that you'll have to pay. So let's say you spend $200, for instance, the monthly payment may be $20. So if you don't pay $20, then you might have an extra fee that you have to pay. But if you pay over the $20 or up to 200, then that's totally fine. It's actually encouraged. And the last thing that you have is your credit limit. So this is usually your individual maximum that you can spend on your credit card. So generally, this is another way that a credit card company can get a fee out of you because if you spend over this limit, then you'll have to pay a fee for that and be charged a higher interest rate. So make sure you're keeping that in mind when spending on your credit card. So there are a few different advantages to using a credit card. Some of these you might know, some of these you might not. So the first one is it says that you can buy needed services using anticipated income. And basically what that means is that let's say you don't have enough money. Let's say you're trying to save up for a TV or something and you know that you have a paycheck coming in later that you'll be able to pay for it that's next week. So what you could do is you could use your credit card and pay for that TV, and then eventually later on you'll have the money to pay back the loan that you basically took out by using your credit card. So if there's something that you need, maybe not a TV necessarily, that you might want to spend money on, then a credit card is a good way to do that. The next thing is that it also helps you build credit. So credit is actually something that's really important because it shows your worthiness as a borrower. So if you're trying to find a property to rent, let's say you're looking for housing, or you're also trying to buy a car, then a lot of times people will take a look at your credit score just to see if you're a trustworthy person that they can give a loan to. So if you don't have a credit score, then it's sort of hard to gauge whether they can trust you or not in that sense. And one of the last things you can do is consolidate your bills. So a lot of times there might be a few different monthly auto payments that you guys might have, like different memberships like gym, Netflix, or even other things like your utilities bills. So if you guys want a place where you can pay for that and not have to keep track of it, then a credit card could be a good way to do that just because you can put them all onto your credit card. And if you have the money to pay for that, then it'll just automatically charge the card, and if you're paying the full balance, then it should build up your credit score. So that's a good way to basically consolidate these bills and help build up your credit at the same time. But of course, with the advantages, there are going to be disadvantages too, right? So one of the big disadvantages with credit cards that happens to a lot of people is that it's really easy to overspend. I know I've personally heard that people tend to spend less with actual cash than they do with cards just because it's like a psychological thing, right? You see the cash leaving your wallet, whereas with a credit card or even a debit card, it just doesn't hit to you as much. So that's a big thing with credit cards is that you need to make sure that you're maintaining your payments under your credit limit just so that you're not overspending and spending too much on things that you may not need. The next disadvantage is interest payments, just because those can easily rack up if you're not paying your balance off or spending a lot on your credit card. And that's really where the financial risk comes from. Just the fact that you need to make sure when you're using a credit card that you're being responsible so that you're not overcharging it and having a high amount of interest. So, one of the things I wanted to show you is this link right here. And basically, what it is it shows you how you need to pay off your credit card. So, can you guys see my screen here? All right, cool. So you guys can see this like credit balance thing. Okay. How about now? Can you guys see it? All right, cool. So basically what this chart shows is that it'll have a few different things. So let's say we start with the credit card balance. So what do you guys want to use as your credit card balance? Like how much you need to pay off? Okay. So let's just start with $3,000 for instance. So let's say you need to pay off $3,000 on your credit card. The interest rate right now on average is like 20%, so we'll just say that. And how much do you guys want to pay per month? Okay, so let's say for instance that you're paying $250 per month. So click calculate, you'll find that of the $3,000 that you spent on your credit card, 11% of that would be interest, which would be $375. And it would take you 14 months to pay off that balance. But what if we decrease that monthly payment to $100? So now you guys can see that it actually changed. So when we decreased our monthly payment to $100, we still have the same $300,000 principal, but now there's more interest. It's actually about $1,200 of interest. So it's a higher amount, and it'll also take longer to pay off, 42 months. So that just shows that if you have a higher monthly payment, then it'll take less time to pay off your principal, and you'll also be charged less interest. So that's sort of why we encourage to pay more than the minimum balance, because that way you'll end up paying less in interest than you would if you didn't. But you'll be fine paying off the minimum balance, but ideally, if you can pay more, then it's great to do that. So does anybody have any questions about this? Okay, let me open the chat. Okay, so Angelica's good. Caleb said, are there any disadvantages to using a credit card over debit or cash? Seems like credit card is just a debit card with extra features like being able to borrow interest free until the end of the month. You just make a ton of free cash back by not carrying a balance. No. So you're sort of correct. You can it's sort of like a debit card with extra features like the cash back. But one of the main, I guess, pros of a credit card is the fact that you can build up your credit score. And sort of like we went into earlier, your credit score is used and looked at for a lot of different things, like when you're taking out loans. And it's really common for college students for like housing or if you're trying to buy a car. So credit score is one of the things that they'll take a look at. And if you're not using a credit card at all, then there's no credit score to look at. So it's sort of hard for like the bank or the person you're taking a loan from to see if you're like a worthy person to give you your money and if you're a worthy borrower, basically. Did that answer your question? Okay. So with that, we'll move back to the slides. Can you guys see it now? Okay. So now we're going to do a little activity. So this is a credit card comparison. So what we're going to do is take a look at a few different types of credit cards, and you guys are going to pick one and tell us why you picked that one. So some of the things you can think about when you're looking at these credit cards is what made you choose the specific card, like any different features, and why those are important to you based on your situation and how it can help you reach your financial goals. So these are the three different types of credit cards that we're going to be taking a look at. If there's one that you guys can't see, I can zoom it in and show you, but we'll take a couple seconds to look at these and we'll talk about it afterwards. All right, so have you guys gotten a chance to look at all these three? Do you want to share which one you picked and maybe give some reasons why? Okay, let me just open the chat. All right, so Caleb said CFU, so Chase Freedom Unlimited, looks the best because the 3% back is on all purchases without category restrictions. APR doesn't matter because carrying a balance is really dumb. Yeah, so if you can pay off your whole balance, then that's great. And also, the 3% cashback is a nice thing for basically most purchases that you'll make on this card. So thanks for sharing, Caleb. Is there anyone else who wants to share? All right, cool. So with that, I guess we'll move on to the next thing. So next, we're going to be talking about credit reports. So basically, what a credit report is that it has a few different info about you and your information as a credit borrower. And some of the few different things that can be found is any identification information like who you are and your employer and your payment history. So do you have a history of paying your balance and paying it on time? Next thing is inquiries, which is basically anytime you try to check your credit report. So what's interesting is that if you check your credit report too many times, then it can actually hurt your credit score. So they actually keep track of this. Another thing is any public record information about you. So one of the main things that people check on their credit report is their credit score. And basically, first we need to talk about credit bureau. So what these are is they generate the credit report. What is a public record request? Oh, so public record is basically just any information about you, like any, I guess it's like criminal activities is one of the most common things, which isn't like common for people, but if that is, then it'll be stuff that's on there. And just other things like your employment data and any other identification. Okay, so going back to the credit bureau, so basically what they do is they're the ones who generate the credit reports. So some of these you might have heard of, like Equifax or Experian. and TransUnion. And I know that we talked earlier about the fact that if you check your credit report too many times, then you can actually get a penalty. But on this website here, freecreditreport.com, you can get a free credit report once a year. So this is a good way to check it without having that penalty. So definitely a great resource if you're interested. And credit scores are generated through a credit scoring agency. So the main two are FICO and VantageScore. So FICO is the most common one, so that's what we'll be talking about specifically. So going into what your score is based on. So this is a nice little diagram that shows the breakdown of your credit score and what are the parts that go into it. So we'll be going in order of most important to least important. So this is a good chart to keep in mind when we're talking about this. So the first one is your payment history, and basically what that is how much your bills have been and when you've been paying them, and if you have any history of bankruptcy. So sometimes people will file bankruptcy as sort of a reset, but this will still be able to be found on your credit report. So payment history is one of the biggest things, and that really just goes into the idea of paying your bills on time and paying at least the minimum balance, which goes into the next thing, which is your credit utilization. So how much you currently owe, and that's about 30%. And also how much of your available credit is in use. So sort of like the credit limit we talked about earlier is how much do you have left of that limit to spend. So make sure that you're not spending above that limit. So a good tip is to try to keep your credit utilization under 30%, just because if you don't go too much over that, then you'll be in a good range of not spending over your limit. The next thing is the length of your credit history. So how long you've had these cards open and how many that you have in the first place. So the age of your oldest and your newest, and it just takes the average of all of them. So basically, if you have had accounts for a long time and you've been paying them off, then it'll generally reflect well in your credit score. So one interesting tip about credit utilization is that if you've been paying off your balances and doing a good job with that, then you can actually ask to increase your credit limit so that you can decrease your utilization ratio. So basically, if you've been paying off your balances and doing a good job, then this is a good idea to do just because you'll have more playing room for your credit limit. So one of the next things is your credit mix. So this is basically the different types of credit accounts that you have. So it's not actually just credit cards. There's also other things like mortgages and your apartment fees or car loans. So there's also different types of credit cards, like some offered through your bank, some offered like through retail stores, for instance. I think even Apple recently started a card that's pretty interesting. So there's a lot of different types of credit accounts that a person can have. And these will all be reflected here in the credit mix area. And finally, the last part is your new credit. So new inquiries just means like how often you've been checking and whether you've been approved or denied for more credit options, like if you're trying to open up new accounts and also recently opened accounts. So if you have 3 credit cards and open a new one, then this will sort of go into the new credit place because it's not exactly established yet, but it will be over time. So does anybody have any questions about the credit score breakdown? All right. So for credit score, one of the interesting things is your score itself, obviously. So these are the different ranges that people will fall under. So going from bottom to up, generally most people want to be in this range in good to fair. But if you're here, that's great. And if you're here, then we'll be talking about a few different tips to bring yourself back up. And one interesting fact is that the maximum credit score you can have is 850, but most people won't be able to maintain that just because your score is always fluctuating with payments and opening up new accounts and stuff like that. So it'll never stay perfect forever, but if you can stay in the good amount of range, then you should be good for using credit. So how to build up your credit score? These are a few different tips for if you're trying to start out or if you have a low score and want to bring it up. So one of the first things you could do is get a low limit credit card. So basically, like we talked about, if you don't go over your spending limit and show a history of that, then it'll show that you're a trustworthy person who is being responsible, and you can start increasing your limit and building your score. Next is establishing a steady work record. So, like we talked about in the credit report, one of the things that's looked at is your employment history. So, if you show that you're not bouncing between a lot of jobs and you're working pretty steadily and doing well with paying off your credit, then it looks good. The next thing is to pay all your bills promptly and on time. So, sort of like we were talking about earlier, ideally you try to have as minimum or honestly no balance as you can. So, if you can, then pay more than the minimum balance or try to pay all of it off just so that you don't have to deal with having to pay it off the next month and you can keep building up your credit. Next thing you could do is open up a checking account and don't overdraft. So, checking account is a great way to spend money other than your credit card. And like we talked about earlier, basically it's an in and out function. And overdraft is one of the biggest ways that people can lose a lot of money to interest. So, if you're responsible with that, then it shows that you're not really taking loans from overdraft fees and being responsible with your spending. Some other ways are to open a savings account and making regular deposits just because this has you build up a savings that you can spend if you feel like you've spent too much on your credit card. It's just set aside for that. Another thing you can do is apply for a local store credit card and make some regular payments. So this increases the diversity of your credit, and also if you don't spend too much on that card, then it can be a great way to build up your credit while not spending too much on the card itself. And applying for loans using your savings. So this is like we talked about earlier, where if you apply for a loan and use the money that you saved up, then it's a great way to show that you've been able to pay off for any loans that you've taken. And one thing that a lot of people do is co-signing. So basically, they might co-sign on a loan or even on a credit card. So what this means is that you apply for a credit card and you say that this person will co-sign with you. So if you don't pay the credit card bill, then it goes to that person. So that's great because a lot of times people will have their parents co-sign with them, and a lot of times your parents will be able to pay off that bill because you're just not earning as much as a college student. But one of the things you have to keep in mind is that you make sure you trust the person you're co-signing with, just because if they can't pay that off, then it's still on you. So Whitney actually just said something. I'm gonna open the chat. Whitney said if you're experiencing financial strain, instead of adding fees on your credit cards, reach out to the Emergency Student Assistance with ETD. Yeah, so that's just one of the student resources that you guys can reach out to if you feel like you're having trouble with maintaining your credit cards. So with that, how to fix your credit. So this is basically just a summarization of a lot of the things we talked about. So paying off your balances on time and paying down any debt, because like we talked about, if you don't pay off your credit card payment and it keeps building up, it's going to snowball and keep increasing higher and higher until it gets overwhelming and it may get to a point where you can't pay it off in general. So make sure that you're paying at least the minimum balance so you're not facing any penalties for that. But ideally, if you can pay more, that's great. Paying off any past due balances sort of goes into that because it'll just snowball like over and over. And one of the last things that people might overlook is to dispute any inaccurate information. So basically, there might be times where, let's say you spent money, you get a call from your credit card saying that someone spent money in New Jersey at a gas station, but you weren't in New Jersey at a gas station. So a lot of times you might want to check your charges, or even the card company will get back to you just to make sure that there wasn't any inaccurate information, because maybe your identity could have been compromised or your credit card information was stolen. So you just want to keep track of that and make sure that the only person who's spending on your credit card is you and that there's not any inaccurate information that's going on. So now we're going to do another activity. So this is a FICO score estimating activity. So What you guys can do is scan this QR code using your phone, and it'll take you to a website where you can figure out FICO scores. So when you guys are ready, we can move to the next slide. All right, so we're going to move on to the first person. So this is Sam Spendthrift, and he's a college junior, and he couldn't wait until he turned 21, so he applied to a few credit cards. And these are some of the details about him and his profile. So what you're going to do is that this website actually has some questions that it'll prompt you to. So based on the information here, you can go through the website's question and figure out what Sam's credit score is. So let's take a couple minutes to do that. All right, so if you guys have gone through this scenario on the website, then you should have found that Sam's credit score was in the range of 575 to 625. So if we go back to our little chart here for credit scores, this would fall in the poor category. So just keep this in mind when we're taking a look at these people's credit scores. So Sam was in the poor category, so some things that he could do to increase his credit score would be to pay off his outstanding balance. He's had $4,000 outstanding, so he could try to pay that down. One of the next things he could do is not to miss payments. So just making sure that he's paying his payments on time and not missing them, just so that it doesn't build up. And another thing is not to go over your credit limits. So like we were saying earlier, keep your credit limit in mind so you don't overspend on your credit card. All right, so the next person is Jessica Credit Smart. So Jessica's a college senior. Her parents gave her a credit card when she turned 17 by making her an authorized user on their credit card. So this is like we were talking about earlier, where people can co-sign with the parent and they will pay for the credit card in most cases. So as an authorized user on their account, she benefited from her parents' diligent credit card habits. She also had a few student loans in college that she will start repaying after she graduates. Here are some details about her for her profile. So we're going to do the same thing where we go through the FICO score website and try to figure out what Jessica's credit score is. All right, so if you guys went through the exercises, then you have gotten that Jessica's credit score was excellent. So it was in the 750 to 800 range. So this is good because she has a strong credit score. So some tips for her is that she's doing great. And like we talked about earlier, make sure you trust your co-signer because if she wasn't able to pay off her credit card bills and her parents weren't able to either, then she could get into some trouble with that. Some other tips she could also do is try to pay down her outstanding student loans just so that she can get a little higher. But other than that, she's doing well. So the last person we're going to talk about is Danielle Debt Free. So Danielle is a college junior. She's always been very cautious with money and thinks her friends with credit cards are crazy. She pays only with cash and debit cards, and while she knows she can handle credit cards, she doesn't want to ask for her parents to sign off on a credit card for her because she doesn't turn 21 for a few months. So this isn't very long, but we're going to do the same thing where we go on the FICO website and try to figure out Danielle's credit score. All right, so after taking the time to go through this, you should have found that Danielle didn't have a credit score because she had no cards, she had no loans, so there wasn't a way for a credit score to be determined for her. So what are some tips for her? The main thing is that you can't see if you're a worthy borrower if you don't have a credit score. So this is not bad because you don't have a low credit score, but this isn't good either because if you're trying to take a loan in some cases, then not having a credit score might be making more difficult for the person to loan you the money in the first place. So with that, that basically wraps up the presentation. And one thing I wanted to clarify is something that we talked about earlier. Right here in a credit report is public record information. I didn't really know, but after taking a look, some of the things that go into that are things like your bankruptcy history or any divorce history that you might have. But some of these things do affect your score, and some of these don't. And also any foreclosures that you might have gone through when you have a rental or property that you own. So some of these things affect your score, some of these don't, but they are things that can be found in your credit reports, so you can keep that in mind. But with all of that, that's all we have for today. So I wanted to thank you guys for coming out, and does anybody have any questions? Yeah, I'm pretty sure we have a recording of the tax one from yesterday. Whitney, can you confirm that? So I'm not sure if we have a recording from the tax presentation. Most likely we do because we're recording this one. So could you send an email to Common Sense at UT Dallas right here and just say that you're interested in getting the link for that, and someone will get back to you. All right, thanks. Any other questions? Again, thanks for coming out. Hope you guys stay safe. And if you have any questions, you can email us. And I think that's about it.